Good morning, sir.
Good morning.
Good morning, sir.
Very good morning.
Good morning, sir.
Good morning. So today we are going to start the new chapter and we'll try to cover so far whatever is possible. Budget and budgetary control. Okay. So if I ask you what is budget? How do you see budget? What do you understand of budget?
Sir, the predetermined cost.
Okay. All right.
The budget is like, it is a plan to spend money over a particular period.
Is a plan?
To spend money, sir.
It's a plan to expend money. Okay.
Yes, sir. Over a particular period of time.
Budget
Yes.
is an estimated cost of expenditure and savings, so that around a particular period of time.
Budget is the estimated planning for a particular period by using the fund in that period. The fund can optimize the fund by using in that manner.
Okay. All right. So we have got a very inclusive kind of definition for budget. If you see, a budget is actually a detailed plan expressed in quantitative terms that will specify how resources will be acquired and used during a specified period of time. So these are the 5 essential components should be there in the definition of budget, right? First, a budget is always prepared for a specified period of time. So it may be a budget for a month or for a year. Okay, budget is always either it is for a month or a year or quarterly, half yearly, whatever it is, but for a specified period of time. And it is a detailed plan in quantitative terms, right? It is not in a qualitative terms. You cannot prepare a budget where you will say we will have good sales this year, very good sales here. So it is required to be in a quantitative 500, 400, 1,000, whatever it is. It should be in quantitative terms. And while telling this quantitative terms, I'm not saying it should be in monetary terms. I'm not saying that it should be in monetary term. Not necessarily it will be in monetary term, but it will be in quantitative terms. So when I say quantitative terms, why I say quantitative terms? Because it cannot be in a qualitative format, first of all. Second, it not necessarily it will be in monetary form, like you want to buy the quantity of material. So you prepare a material budget where you write the volume of material you are going to purchase, the quantity of material you are going to purchase. Production, the quantity of production units you are going to produce in a particular month. So labor resources, how many labor hours you need, you budget for that. You prepare a estimation for that, right? And when this budget is prepared, it is not necessarily for expenses. Many a time it comes to our mind while defining budget that it is the estimated expenses for a particular period. No, it's not necessarily be for expenses. It can also be for the earnings, right? So therefore, the resources will be specific. It specifies the resources which is to be acquired and the resources which is to be used. So you plan for your revenue as well as you plan for the expenses, right? So budget is a detailed plan expressed in quantitative terms, both for resources and expenses for a given period of time, for a specific period of time. So this is the complete definition of budget. So we have almost everything is coming in this definition. Now, what is the purpose of the budget? If you see, there are certain purposes of the budget, or you can say the whole budget and budgetary control is a process of consisting of certain things, right? The first thing is that planning. The most obvious purpose of budget is to quantify a plan of action, right? So we plan something, we have to quantify it. We have to bring it to a quantitative term. right? Number of units to be manufactured, number of hours to be worked, or a particular amount of profit you want to have, a particular sales you would like to have. So it's a uh, we quantify that plan. So whatever plan or strategy we are having, the objective we are having for a particular period of time from our business, we bring it to a quantitative form, right? Then facilitating communication and coordination. Second purpose of the budget is to facilitate communication. What facilitate communication? If I know that what is expected from me, from my top management, I will work for that. Right? If I don't know what is expected from me, I will not have a clarity. So what I will be doing may not be solving the purpose of the top management, right? So we will not be going for the goal which has been set by the management. So there will be that goal congruence will not happen, right? We are not working for the same objective, which is the overall objective of the organization. So for budget helps us to get that, right? So there is allocation of funds for us. So we try to spend money within that, whatever is the budgeted allocation, we try to spend less than that. So, or whatever target has been given, we try to achieve that target. So budget also facilitates this communication and coordination, right? Then budget also having a purpose of allocating the resources properly, because budget is a word we use for limited resources. Budget is derived from limitation, right? If you don't have any limitation, you don't do any budget. Like how much sunlight you will consume, right? You don't budget for it, because we know that it is plentifully available. Water, how much water will consume, we don't. But the moment we found that water is in scarcity, then we plan that how much of water will be consumed for different purposes, right? So if there is no limitation, there is no budget. So budget is something which is for the limited resources, and then it comes, we have got various objectives to do, various options we will be having, various alternatives we will be having, but we would like to use our resources so that will give the maximum benefit to the organization, maybe in short term or maybe in long term, right? So we have to allocate the resources properly, and there also budget helps us. Another important thing related to budget is controlling profit and operations. Budget serves as a useful benchmark with which actual results can be compared. Such a comparison can help managers evaluate the firm's effectiveness. So we have a budget, and we have budget for everything. Every activity we are doing, we will be having a budget. We'll have a budget for sales. We'll have a budget for production. We'll have budget for material procurement. We'll have budget for labor resources required. We'll have budget for all the overheads, right? So we'll have a budgeted profit. Now, if you have a detailed plan, and when you get the output, when you get the result, right? So the result may be in relation to production. So you estimated for 5,000, you produce 5,100. Is it good for the organization or not? Yes, it is good for me, because you have worked more efficiently. So our production is more. So the person who is responsible for this activity should be awarded for this, right? Some kind of incentive should be given to that person, because he has achieved the target, achieved the objective, right? So we do that comparisons. Otherwise you will not be able to do the comparison if you don't have any estimated figure. You don't have budget. So if you have a budget, you have an actual output, you can always do the comparison. Sales, you can do a comparison. Any expenses, you can do a comparison. Material consumption, you can do a comparison, right? So when you do that comparison, you get a deviation, right? So that deviation may be positive, may be negative. Right? And that deviation we study. We try to find out why there is a positive deviation. For example, for 1,000 units, the material budgeted was the budgeted material cost was say 50,000. And then we found that the actual material consumed is 40,000. Is it good for the organization or not?
Yes.
Is it good? It
Yes.
is good for the organization because you are saving 10,000, right? That will increase the profit of the organization. But there is a problem. We need to know why the actual cost has gone down. How come we have reduced the material cost? If we have worked more efficiently, we have negotiated with our supplier in a better way, or there is a reduction in the price, or it is the poor quality of material used by the manager, right? Or poor quality of material purchase. So we need to know why there is a deviation, even if it is a positive deviation, which is good for the organization. We need to know that why that deviation has happened. It has got two objectives. First objective is to identify the reason behind it. The reason is a rightful reason or it is a wrongful reason. That also we need to know. The second thing is that we will correct it in our next plan. Because if I plan for 50,000, I also arrange another 10,000 rupees cash for it, which I don't need to arrange, right? So for that purpose also, we try to find out the differences we get from the budgeted and the actual output. And if we find that the department head, the responsibility center head has done a very efficient work, then in that case, we can give them incentive. Okay, we can incentivize our employees, our departmental heads, our responsibility center heads if they have done well. And we can also take some strict action, corrective measure if it is not in favor of the organization, right? Because that will reduce our targeted profit or budgeted profit. So these are the purposes of budget. Then comes what are the different types of budget we prepare. We actually prepare two types of budget. One is operational budget, and the other one is a financial budget. Operational budget and financial budget. Under operational budget, we have got sales budget, we have got production budget, we have got purchase budget, we have got material purchase budget, we have got labor budget, we have got budget for manufacturing overheads, we have got budget for office and selling overhead. So you have much before you execute something, you go ahead with something, you will have a plan, and that plan is there in a very quantitative form, and you know that how much you are going to spend, right? Your actual will always differ, but then you have a budget based on which you arrange cash, right? And you plan the other things. So these are the operational budget. Operational activities, whatever we do, the related budgets are called operational budget. And when it comes to financial budget, the cash budget is a part of financial budget. Cash is part of finance. Similarly, capital budget is also part of financial budget. Then budgeted income statement, okay, and budgeted balance sheet. So these are part of your financial budget. Now, if I ask you, just give me 1 minute. Huh? Okay. So what I'm asking, if you see these all these operational budget, see we have to start budget activity from one particular budget. We'll first estimate something, and then we'll move on, or we'll estimate the rest of the things. What is that first budget we prepare? We should prepare in a business or organization. First budget we start with.
Cash budget.
Okay, you are saying cash budget. Why are you saying cash budget?
So without cash, cannot do anything.
Yes, it is said little loudly.
So without cash, cannot do anything.
For example,
Sir, I think financial means operational budget should be done first, then
Okay.
financial.
all right, out of the operational budget, which one we should start first?
Purchase budget, sir.
Purchase,
do purchase
material,
budget.
material purchase.
Okay, why are you saying material purchase budget to be prepared first?
So because for the production, material is the basic thing, the first thing we need. Otherwise, without raw materials, we cannot produce anything.
So you have 1,000, you have material purchase budget, you can always purchase, no? So if you can purchase, right, so you plan for purchase first, that how much material you will purchase, then you will produce, and then you will sell. Do you think you will purchase first? How will you determine that how much material you will purchase?
So should we do
By
production
estimating the
budget first?
By estimating the probable sales of how much we would be willing to sell.
That means you are planning sales first, no? You are not planning purchase first. You are planning sales
Yes,
first.
sir.
And Saswat said production budget will do first. How do you get Saswat production budget? Why production budget?
So we will purchase according to that. So we will purchase how much we need to produce.
But how will you determine that how much you will produce? How will you determine that how much we will produce? Suppose I have to produce it for April, May, and June. How will I determine that how much I will produce? On what basis? What is the starting
Expecting
point?
the demand in the market, sir.
Expecting demand means again forecasting the sales.
Yes, sir. Yes, sir.
So you're saying we'll first prepare sales budget.
That's it, sir.
Okay.
Yes, sir.
All right. All right. In most of the cases, we first prepare sales budget, and as per our forecasted sales for different months, we plan our production. Okay. Production is something which is in our control, so we can produce. So we plan for sales first, then we plan for production. We have to keep some inventory, some goods to be sold, and some inventory to be carried to the next period. So this is how we plan. But not necessarily you will prepare sales budget first. For example, there is you can sell any number of goods. In a particular period, you can sell any number of goods. Will you prepare the sales budget? I don't think. I will. If I can sell any number of goods, I will try to produce the maximum number of output because I know it can be sold. Can you give me one example which has happened in recent past that any number of output can be sold in the market?
It's mask,
So vaccine.
vaccine.
Yeah. Okay. If to mask to be partly correct, vaccine is the best example, suitable example for this. Any amount of vaccine produced in the initial phase has got a demand. So companies could not manufacture as per the demand. So what was the constraint? What was the constraint? The constraint was production capacity. Okay. Plant capacity was the constraint. So plant capacity is the first budget. So first I need to know that how many units I can manufacture in a year. For example, 10 lakhs. Based on that, I will plan for different months, what will be my production. Based on that, I will go for procuring my material and arranging the other resources. So I started with the constraint, that is the production capacity, plant capacity. Right? If this plant capacity won't have been a constraint, limiting factor, then I would have planned the production. So how many units I will produce? Okay, because whatever number of units I'll produce, I can sell it in the market. That was the situation initially when vaccine was developed, right? So what we are getting from the discussion, that the limiting factor is the starting point of your operation budget, limiting factor, or constraint, you can say constraint. Okay. For example, now, if you have any idea about the automobile demand in our country, automobile demand, most of the automobile companies are having demands that they are not immediately delivering the goods. So they are taking 3 months time. In some of the cases, they are taking 4-5 months time. Okay. Now, why it is happening? It is happening basically because of the chips which are required in automobile are not available or not supplied in the right time. So we get it from China or Taiwan or whichever countries. We are not getting those chips. And because of that reason, even if we are having the plant capacity to manufacture, we could not manufacture. They are not in a position to manufacture because chips are not available. Because these chips are required for various things and the manufacturing capacity of that company is limited. So you don't get as you order. So it takes time in getting the chips. So therefore, it is hampering your production. Right? So even if you have sales demand, because you are booking means there is a demand. You need it. When I book the car, I need the same day. But if I don't get it, then I have to wait. That means demand is there, sufficient demand is there. Okay. Just one. All right. So this is the constant. That means the availability of material is a constant. Even if you have got the plant capacity, you have got demand in the market, but you cannot manufacture because material availability is not there. And one of the material availability, the rest of the materials are there. Steel is there, tires are there, and everything is there. But chips is not. So they could not manufacture. So they will first prepare a budget that how many chips they are going to get it in the month of January, in the month of February, in the month of March, and then on the basis of that they will plan their production and the rest of the things will be done. Okay, so starting point of your budget is always the constraint, and budget is something which is related to limited resources, right? So that you have to remember it forever. All right. Then comes the types of budget. Budget, you prepare a budget for a certain quantity. Say, for example, 5,000 units. You prepared the amount of material required, labor required, and all other expenses, and your sales, your profit. So this is, and then when you actually do your production, you found that you produce 5,200 units. Now, can you compare these two figures? If one is of 5,000, the other one is of 5,200. Can you do that comparison? You can always compare, but that comparison will not tell you the fact, right? If there is a variance, if there is a variation, negative or positive, that will not tell the reality. So what you need to do, you have to convert this into 5,200. Okay, so you have to revise your budget. If you don't revise, some of the organizations, they don't revise their budget. That is called static. If they revise the budget, then the budget is called flexible budget. Okay, so with the changes of volume, you also change your budget, and you can only do a revision if you prepare a flexible budget, if you revise the budget, and then you compare it with your actual output. Then you can say whether there is the variation is there, and whether it is negative or it is positive, it is good or bad, that you can do. Okay. Then comes there are rolling budgets prepared also. So I said that we prepare a budget for a specific period, but there are budgets which are, for example, I have a budget, quarterly budget, January to March, and then March to June, like that. January to March, I have a quarterly budget. But then I have a practice of preparing rolling budget for 3 months. My organization always keep a budget for 3 months. So January to March is your budget you had prepared. But the moment January month is gone, you revise it, you make the budget February to April. So always you work on a rolling budget. That rolling or revolving or continuous budget, that is called continuous budget also. And then I said you prepare operational budget, you prepare financial budget. When you put all those things in one big sheet, that is called master budget. When you put it in one paper, then it is called master budget. You have all material, production, sales, and everything, and so that we can refer it, and from one glance we will be able to find out how things are happening. Okay. Now, for example, you are the branch head. You are the branch head of a particular unit. Okay. And you are asked to prepare a budget and then submit it to your regional head. Okay. So you have to project your revenue. Also, you have to project your expenses. While projecting the revenue, what will you do? What will you do while projecting the revenue? For example, you think that you can have a sale of 12 lakh in a month. So would you like to tell that you will have a sales of 12 lakh in the month? You are projecting a sales of 12 lakh, or you will tell 50 lakh, or you will tell 10 lakh. What you will tell? Or you will tell the same 12 lakh. Please raise your hands, those who want to say. Yes, Abhik, tell.
Sir, depending on the situation, we can choose either. But I think more of that range, if we choose a range, that it will be 12 to 15. That will be helpful. Revenue. Yes, sir. In revenue, if we choose a range, like it will be between 12 to 15. So in that way, we can do or not.
No, actually, you have to come to a figure. You will tell that this is what I will be targeting to achieve, right? So I will be able to sell 12 lakhs, or I will be able to sell 10 lakh, because taking all those figures, they will prepare one budgeted income statement. So from different regions, what is the targeted sales they will have, they will compile it, and then they will put it in their income statement, and then they'll find out what is their budgeted profit, right? And they work for getting that budgeted profit, right? So they will expect that their subunits or field people will give them a figure on the basis of which they will be keeping a target, right? So they will ask you to give how much sales you can make. So give that figure. So they will be asking you. So you are thinking that you can sell up to 12 lakhs. So if you give a 15 lakh figure, then what is the issue there? If you give a figure of 15 lakh, if you give a figure of 15 lakh, that means, for example, last year you had achieved 11 lakh, and you think that you can comfortably achieve 12 lakh, right? So if you give a figure of 15 lakh and you don't achieve, you don't get any incentive, because you have not achieved the target. So normally what you used to do, when it comes to revenue, you always try to tell that 11 lakh I can achieve. Last year, whatever I had achieved, I will be able to achieve this year, because the situation is more or less same, or situation is not better. So I am giving a figure of 11 lakh. So what is the benefit to you? The benefit is you have a cushion, right? You can, even if you sell 12 lakh, you can always tell that I have achieved my target, because target is a figure which is given, absolute figure given to all the different responsibility heads, right? So, and if you don't achieve that target, that figure, that you have not performed well. That is normally considered that you have not performed well. But if you have achieved the target, so that target is derived, it is many a time it is derived from you only. You give this target. So you have a negotiation interaction with your boss or the management, and then there you decide that how much will be the sales for your region. They will say that we will be doing promotion, we will be doing these activities. So if you say 11 lakh, they will say no, because we will be spending money on promotion and all those things. You have to achieve this time 17 lakhs. Okay, so there a negotiation happens, a discussion happens, and then you arrive at a figure, say for 15 lakh or 12 lakh. And 12 lakh is all you are always comfortable with, right? So what I want to tell here is that normally if it is a revenue budget, if you are sales side and you are given a target, you are asked to give the target, then always you try to give a target which is comfortable for you to achieve. So if you know that you can sell up to 12 lakhs, you would like to give a figure of 10 lakh. Okay. And if it is approved, it is, you are very comfortable, you still have, you can sell another 2 lakh and you will get incentives for achieving the target and all those things, right? So in the case of revenue budget, you give a lesser figure or lower figure. And in the case of cost budget, you always try to escalate and give a higher figure. You try to give a higher figure. If you know within 5 lakhs you can manage to do everything, you give a figure of 7 lakhs. So if after deduction still they agree to give you 6 lakh, you will be comfortable to manage all your expenses within 5 lakh. This is called budgetary slack, right? So this cushion created by the managers, whether it is revenue or it is cost, that is called budgetary slack. Okay. And then I was saying that it is sometime at lower level the budgets are prepared and then it is passed to the higher level, right? And then finally it is approved. So you will have first discussion with your head, and then all the heads will have a discussion with the top management, and then the budget will be approved. This is called bottom-up approach. Bottom-up approach. That means your budget process starts from the bottom and then goes to the top, right? There will, in all kinds of budget process, there will be discussion and negotiation, without which it cannot be finalized. But if it is here, it is decided and then it is communicated to the lower level, you know you have to spend this much or you have to generate this revenue. This is your target for this year. That is called top-down approach. Okay, so one is bottom-up approach, the other one is top-down. So at the top of the management, they decide that they will have a 10%, 20% profit from their sales or whatever profit they had last year. They want to have 10% growth in their profit. So accordingly, they align all other things, the sales and everything they align for different regions, right? So that is called top-down approach. But if it is from bottom, it is the budget is sent to the top, then it is a bottom-up approach. Okay. Now, one more thing related to budget is, if I say that you are a branch head, right? No, you are not branch head. You are, suppose you are an intern, right? And you are going to a manufacturing plant. There in manufacturing plant, there you will have different departments. Okay, you will have different departments, and then you are asked to prepare a budget for a department. Prepare budget. Okay, so your boss is saying, have you studied budget? You will say yes. You will not say, I have only attended one class. Okay, whether you have attended one class or not, if it is there in your course, you are supposed to be knowing it, right? So if you are not covering, if you are not asking and I am skipping the portion, then it is a problem for you. Okay, so what I am saying is, so your boss will tell, prepare one budget for this department. Okay. How will you prepare the budget? How will you prepare? Who will tell? Please raise your hands. I expect that few of you will give some idea, because I'm not asking you to prepare the budget, but I'm asking that if you would have been there in that situation, because this has happened with some of the people, right? Okay. Okay, only Oliver raised hand, nobody else. Okay, Oliver, tell.
Sir, I will see what is the limiting factor. Then I will decide that which factor I should choose first, because limiting factor decides the starting point. Then I will accordingly prepare a plan that whether I will choose the sales budget first or the production budget, and likewise, sir.
Okay, all right. I'm adding some few more points there. I'm saying that this is a production department only, right? So production department may not be involved in any sales activities. So they have to prepare their production budget. So not only quantity of production, but for the whole department, the expenses they are going to incur, including the expenses on material, labor, etc. So they will be. So you are asked to prepare the budget for a particular month, say month of May. So what are the other? How will you go ahead with the things? How will you do that? Anyone else? So normally what will you do? You will ask your boss to please give me the last year's budget. Okay. And if your boss provides you the last year's budget, then your work becomes quite easy. So if you know that last year 5,000 units are produced, and this year the projection is 5,100 units, accordingly you will change all other expenses, all expenses to be incurred on the basis of inflation or the cost appreciation. So you'll add that and you will prepare it for 5,100. And if your boss says that no budget is there, we have not done any budgeting last year, you have to start from zero. So what happens? You are not provided with any base. So what you have to do? You will go to the departmental head. Okay. You will talk to the accounts people. right? You will first find out from the accounts people how much salary paid to them, how much electricity expenses incurred by that department, what is the depreciation of those assets. So you will get all these figures from them. Because see, I cannot take assumption and on the basis of that I will prepare budget. I need figures and I need to get it from someone. Departmental head, I will ask that what is the production planning for this year, right? And then I will get the material cost and all those things, and then I will start putting everything one by one, and then I will prepare the budget. But what happened in this process? In this case, you are not provided with any base. So this kind of budget where you are not provided with historical information is called zero-based budgeting. And when you are provided with historical information, that is called historical based budgeting, right? So there are two ways the budgeting is done, one without having any zero base. So that is called zero based budgeting. And in the other one, it is called historical based budgeting, where you are provided with last year's figure or last few months figure, and based on that you do some kind of changes. Now, why, if historical based budgeting is there, why this development of zero based budgeting? Because many a time it happens, we have a historical based budgeting and we don't bother, and we are not very serious about this activity. So normally what I used to do, I write all the heads of expenses, and then every year I do a incremental change. I add and then prepare the budget. There may be something which may not be required at all. Okay. For example, there were phone intra-phone connections, right? Intra-phone connections, inter-office phone connections, and you are incurring expenses. But in last few years, mobile has come, so this is no more there. But what we are doing, we are putting one figure. We are not bothering to see that really we are incurring any expenses or not, right? So things are changing very fast, and accordingly, many of the expenses are no more there, and some of the new expenses have been added. So that we will be able to know, or we will account it properly when we leave this historical base and go for zero-based budgeting. That is why it is advised in companies to go for zero-based budgeting in every 4 or 5 years. Because zero-based budgeting, in the case of zero-based budgeting, what you used to do, if I have to prepare the budget, I first see what are the activity I do. And for those activity, I try to allocate some amount of resources. And then I tell it to my boss. My boss will not approve it, because once it is approved, I will have the authority to spend that money. My boss will not approve until unless he is satisfied that yes, for this activity you have to spend this money, and this activity is essential. So what happens, I put a lot of effort in identifying the activities I'll be doing for the organization or my business unit, and I will also try to find out the reasonable expenses for those activities. So I justify the activity as well as the expenses I'm going to incur, and the boss will agree to that, will be satisfied with that, and then only it will be approved. So in the process, what happens, we will have a much better budget which takes into account all our activities which need to be done, which are required to be done, and we justify those activities, which doesn't happen in the case of historical based budgeting. So for that reason, it is advised for organizations to go for a zero-based budgeting in each and every few years' time, right? So there is no fixed that after 4 years or after 5 years, it can be anything, right? So I think I have discussed all important points related to budget. There is one more concept called Kaizen budget, right? So what is Kaizen budget? Kaizen is a Japanese word, which means continuous improvement. And this concept of Kaizen is used in many Indian companies, many companies. Okay, I have seen this Kaizen used in Tata Motors 20 years back. Okay, what do they do here? They try to do changes that will reduce cost, reduce resources, and becomes the process more effective and efficient. Okay, now if you see, we have say 12 hours time which we can use for study and different activities, because 6 to 7 hours we have to sleep, and our day-to-day activities will be of another 5 hours, okay, 18, and all those things. So if you see the 12 hours, how we are spending 12 hours. Okay, for me, if you ask me how I am spending my 12 hours, for example, I do evaluation, I do invigilation, I do question setting, I do many other activities, right? Some of the activities I do, if it is drafted by someone, the letter, people working under me, I need to see that. And this, see, I can always teach you, I can guide you, I can do research. But if I do these activities, which can be done by associate, right? Faculty associate. And faculty associate will be paid, say, 30,000. And a faculty gets more than 1 lakh. Right? So what is happening? So if I have a person working for 30,000 and the faculty gets more time for doing the useful work, there actually the output will be much better. Similarly, in your case also, if you see the time you are spending, you will find that you are doing some of the activities actually there you are not getting the output. So that you can only do when you see all your activities. So you try for some kind of improvement. That is done in the case of Kaizen concept, right? So that improvement leads to reduction in cost and all those things. So that Kaizen budgeting believes that employees who actually do the job, whether in manufacturing, sales, distribution, have the best information and knowledge of how the job is to be done, right? So under this Kaizen concept, they work with employees, those who are working in the field, not at managerial level, not at strategic level, because these people may not be knowing that ground reality. What small change will do wonder to the organization is actually known to the people, those who are working in the ground, right? Working in the field. For example, I am not an electrical engineer, but still I just want to give one example. Like if machines are kept like this, right, the power consumption will be more. I'm just giving one example. But if machines are kept like this, then possibly the power consumption will be low. Now, who knows this? People, the engineer who is working in the ground, right? If you keep machine like this and 3 people are operating, if you keep it like this and the person is working here, can manage to operate all the 3, because he doesn't have to, because all these are automatic machines, so you don't need to do work throughout the day, but you have to just to observe that things are happening properly or not, right? So you can manage it with 1 worker, 1 employee. So these are the small changes which will have some kind of reduction in the cost or bringing more efficiency in the organization, that can be taken into consideration and can be done under this Kaizen budgeting, Kaizen concept. Okay. All right. Now we will do one budget. Okay. In this question number 2, we will be doing one production budget and one material budget. as I said, there are so many operating budgets and financial budgets. So these are also two budgets. Okay. So production budget and material purchase budget. So what I want, just go through the question and then we will have some discussion and then we'll see that how to do this production budget. So here if you see, in the month of January, you have to sell 10,800 units. And you are asked to prepare this production and material budget for the quarter ending 31st March 98. Quarter ending means January to March. So January, February and March. Okay. If you have to sell 10,800 units in January, would you manufacture same 10,800 or more or less? Would you manufacture the same or more or less?
So there were 2,700 units of product on hand, so we need to minus deduct it from 10,800 and produce accordingly.
Okay. So we have to calculate whether we'll manufacture 10,800 or not. So normally what happens in a production plant or any business organization, you manufacture not only for sales, projected sales of a particular month, but you also manufacture because you have to keep an inventory. You have to keep an inventory. So for your closing inventory also you manufacture. Okay. You not only manufacture for sales, but you also manufacture for your closing inventory. Right? And when you plan for these two, when you go for production of these two, you also take into consideration how much opening inventory you are already having. So that you remove and rest you go for production. So my production formula is the quantity of production I'll have depends on my closing inventory and my sales and minus opening inventory. So I add closing inventory and sales. That is the total quantity I need. And then from that I deduct the opening inventory, the inventory I was having at the beginning that I deduct, and rest I produce. And that the same thing I do it for the next year, next month. In this context, as you all have read the question, I would like to ask you one question. Here it is given, inventory of finished goods at the end of every month is to be equal to 25% of sales estimate for the next month. So if I have to find out how much inventory I will have on 31st January, then I take next month. So if it is January, the next month is? What is next month? February. February. So February my sales is 15,600. 25% of that I manufacture in January and keep it at the end of the month.
3,900.
So 15,600 multiplied by 25%, that is 3,900, will be my closing inventory. So that I produce. So this closing inventory I produce it in the month of January, and I produce what I want to sell it in the month of January. So I produce for these two. But from this I have to deduct what I am having at the beginning of January. That means which is carried from 31st December. And how much is carried from 31st December? The concept is same, 25% of next month's sales. So through chat, you answer me how much is the inventory on 31st December. All of you, please answer me through chat.
So it is already given, no? In the 1st January 1998, the 2,700 units were there.
Yes, it is given. How did you get this? See, it is given. Otherwise also, if you take 25% of January's...
Yes, sir, it is 10,800, 25% is that only.
Yes, 10,800 into 25%. 2,700 is the inventory at the end of December, and that becomes the beginning inventory of January. Okay, so in this question it was given. All right, So what I will do, I will expect you to calculate it. I will just write it. I'll do like this: January and then February, then March. Okay. And then April.
Sir,
April will also come. Here I will write closing inventory. Inventory. And you said that closing inventory of January will be 25% of February sales. So 25% of February sales is 15,600. 25% of that is 3,900. And then you have to sell in January, sales, that is 10,800. So you have to produce for inventory and sales. So you will produce 14,700. And you have some inventory, opening inventory is there. Opening inventory is there. How much? 2,700. So how many units we have to manufacture? We have to manufacture 12,000 units in the month of January. Now the same calculation I want it for the month of February, and through chat you tell me how much will be manufactured in the month of February. Okay, all of you please do it fast, giving 2 minutes time. Tell me that.
Sir, you are on mute.
All right. So what I was saying that you can see the answer here. And in the month of February, your sales will be 25% of 12,200. That is 3050. Okay, 3050. Plus February's sales forecasted sales 15,600. 18,650. Minus the stock you have at the end of January, that is 3,900 you are having. That is the closing inventory. That will become the opening inventory for February. So in the beginning of the February, you already are having 33,900. Rest 14,750 units you will be manufacturing in the month of April. Okay. The same way you will calculate it for March and you will calculate it for April. So this will be your production in the month of January, February, March and April. All right. And then it is given, that is your production budget. So this is the quantity of units.
Sir, you are freezed.
Sir, you are not audible, sir.
Audible, not audible.
Am I audible now?
Yes, sir.
Yes, sir.
All right. So you got it, how we will get this production budget?
Yes, sir. Yes.
All right. So the second thing is for production of these products or these units, you need two types of material. Material A, for every unit you need 4 kgs, and material B you need 5 kgs, right? So if you have to produce 12,000 units, then you need A, 48,000 kgs of material. Okay. And B, you need 60,000 kgs of material. Because you need 5 kg material per unit. So 12,000 into 5, that is coming 60,000. So this is the total amount of material you need. You need for consumption. So will you buy this much only? No. You will buy because you have to keep some raw material in your inventory. Otherwise, what will happen the moment this is finished, you will not have any raw material, so your production will stop. So we want to avoid that kind of situation. For that reason, we keep inventory of finished goods. We also keep inventory of raw material, right? So we will be keeping some inventory of raw material, and how much material we have to purchase depends on two things. How much material you will be consuming in a particular month, and how much material you want to keep at the end of the month. So for these two, you need material and you have to buy. But then if you already have something which you have to remove, so rest is your purchases, right? So what I was saying, if you have to consume some amount of material, that you have to buy. And if you want to keep some amount of material as your inventory, that also you have to buy. And if you already have something that you remove, the rest of the amount of material is to be purchased, right? So here in this case, what is given? Material equal to 1/2 of the requirement of next month's production. 1/2 of the requirement of next month's production are to be in hand at the end of every month, right? So 1/2 means half, right? It is not one and half. It is 1/2. That means half. Half of next month's production requirement, you keep it in the same month, right? In the previous month. So our production requirement for the month of January is 48,000. So half of this, I keep it in the month of December. 24,000, I keep it in the month of December. And what I keep it in the month of December 31st becomes my opening stock in the month of January. Here it was given, but for this it is not given. So we have to calculate. So opening raw material is 24,000, which is January's whatever consumption requirement 50% of that, half of that is kept in the month of December, and that becomes your opening raw material. And similarly, for next month, if you need 59,000 kgs of material, 50% of that, half of that, you keep it in the month of January end, that is 29,500. And for January, you need 48,000. So for closing inventory and for consumption, you need total material of 77,000. You already have 24,000, so rest you have to purchase. So your purchase budget, as per your purchase budget, the amount of material you are going to purchase is this much, right? Similarly, for February, we'll calculate, and March we'll calculate. If you are asked to find out the material cost budget, then what you will do, you will multiply the price with this, and you will write the material cost budget, right? So this is only material purchase budget in quantity, not in cost or not in value, right? So this is how we prepare all these budgets. The rest of the budgets, like labor budget for this units, you need 2 hours of labor hours. So multiply it and then plan that how many labor hours you need, and then accordingly you arrange those labor resources, right? So this is how we will be preparing the budget. We have got so many questions are there, but we don't have time, so we could not cover it. I will be uploading this in your Excel Google Scholar. You can go through. One more thing, just I want to tell you briefly that there is one concept called cash budget. There is cash budget also, and this cash budget I heard that BCM sir has taught you in financial accounting and asked you to prepare a cash budget. So yes, in cash budget, what? Yes, cash. Right. So in cash budget, basically what we used to do, we write the opening balance of cash, and then we write all the receipts. And from that, all receipts, we deduct all the payments, and then we get the balance. Sometimes it happens that we have to keep a minimum balance, right? So suppose in this question, the minimum balance is 5,000. So my balance should be 5,000. But here I'm having a balance of 6,000. If I'm having a balance of 6,000, I need not to bother about 5,000 because it is more than that minimum balance. And this balance, this closing balance of April will become the opening balance of May. And then in May, you write all your collections and then all your payments, and then you get a balance. Here you are getting a balance of negative 6,300. And as per this question, we need to keep a minimum balance of 5,000. But already your payment is more than your collection. So it is already coming 6,300 negative. So how much you have to borrow? You have to spend 6,300 and you need a money to be kept is 5,000. So you have to borrow 11,300 rupees, right? So 11,300 is your borrowing for the month. Same. Now this 5,000 will become your opening balance for the next month, and then you write all the collection and all the payments, and this is how you used to do it, right? So there are some difficulties also in this question, but and this question is not going to come in your exam. Whatever things we have done it in the class, based on that only questions will be asked. You will be asked 4 questions in your exam. Okay, you will be asked 4 questions in your exam. You have to answer only 3 questions, right? So what I was saying, out of 4 questions, 1 theory question will be there, and 3 sums will be there. And the portion is whatever things we have taught. Some of the 1 chapter we have not touched, even chapter 7 we have not covered, right? So whichever chapters we have done, so go through that, okay? And so almost here I end the class. If it is possible in my part to take 1 class, I'll try. Otherwise, the course I am ending here. And wish you all best of luck for your exam. Do well, right? And we'll be meeting. Mostly, otherwise in the next semester. Okay, those
Sir,
will be.
Today's budget part will come.
Today?
Sir, today's part that you taught, budget part will come. That these problems.
This problem will come. The problem which I have solved, if anything has to come, then that problem and the theory portion which you have discussed, that much only come. And budget is a very important chapter. So I will expect that please go through that chapter, the theory portion, because sometimes it is asked in interviews, etc. And whatever is basically asked, I have tried to cover most of the things. Right? Nobody will ask you to do the sums, but the basics of budget can be asked, and you can also be asked to prepare a budget. The process which I said, you have to follow the same process, identify the activities and the amount required, and then add it together. That will be your budget. Okay. So,
Okay, sir. Thank you, sir.
Sir,
Thank you
what is
very
the
much.
timing of today's quiz, sir? Timing of quiz.
today's quiz, no?
Yes, sir.
Today you already have a quiz, I think, at 8 o'clock.
Yes, sir.
Yes, sir.
Yes,
We have
sir.
a quiz at 7:15 and a quiz at 8.
Yeah.
Yes, sir.
So if I take the quiz tomorrow, is it okay for all of you?
Yes, sir. Very good, sir.
I will take the quiz tomorrow, right? Because I have heard that you have got quiz. So I want that you will be preparing for that, right? So tomorrow I will be taking quiz. All right. And those who have missed the quiz, I will give one more chance to them. Those who have missed the quiz, they can also appear.
Okay, sir.
So I'll take your attendance now. Abhinas Patnaik,
Present, sir.
Aditi,
Present, sir.
Aditya, Aishwarya,
Sir, she was there, but she got disconnected.
Aliva, okay.
Sir, I am also present, sir.
Present, sir.
Alok,
Present, sir.
Anuradha, Aritra.
Sir, Aditya Gawal present, sir.
Aritra is not there.
No, sir, she's there. Her mic is not working. She's
All right.
Present. Sorry, sir.
Arpan,
Present.
who is present?
Anuradha present, sir.
Okay. Arpan,
Sir, Arpan was there.
Arpan.
He got disconnected.
Arpan.
Mohanty.
Arpan Boidar,
Present, sir.
Asis, Avik,
Yes, sir.
Bhaskar,
Yes, sir.
Chandita,
Present, sir.
Debopam,
Present, sir.
Deepsika, Chinmay, Gautami,
Present, sir.
Itisri,
Present, sir.
Mahasweta,
Present, sir.
Nirvik, Pratyasha,
Present, sir.
Pratyush, Rahul,
Present, sir.
Rajeshwari,
Present, sir.
Rishabh,
Present, sir.
Meenakshi,
Present, sir.
Sadeep, Sambit,
Present, sir.
Sambita, Santanu,
Yes, sir.
Simran,
Present, sir.
Sharda,
Present, sir.
Shivam,
Present, sir.
Shriya,
Present, sir.
Shreya,
Present, sir.
Sneha,
Present, sir.
Soham, Soumyajit,
Present, sir.
Subhajit,
Present, sir.
Subham Sahu, Sunit,
Present, sir.
Tini,
Present, sir.
Yash, Aditya, Avinav, Kumar Aditya. Given, Abhinav given. Kumar Aditya. Shivani.
Present, sir.
Piyush.
Present, sir.
Itisri. Dibbajyoti.
Sir, you got disconnected.
He got disconnected, sir.
Who? Dibbajyoti.
Immediately, yes, sir.
Siddhant.
Present, sir.
Saswat.
Present, sir.
Sonali.
Present,
Naman. All right.
Sir, roll number 148, Aditya Agarwala is present, sir. Aditya Agarwala,
Aditya. Okay.
148.
Given. Huh? So all the best to all of you once again.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.
Yes, sir.